Okay. Good afternoon. Hello.
Yes, sir. Good afternoon, sir.
Good afternoon, everyone. I am Suraj Jain, moderator of this webinar. We are delighted to welcome you all in the webinar organized by CP Committee of ICI. It is my pleasure to be a moderator for the webinar on first session, audit considerations relating to service organization, and for second session, how to face GST show cause notice and its reply. In a short while, we will start this webinar. First, I will like to apprise you about I will tell you about the CP committee, ICI. The profession of charter accountants is growing leaps and bounds. And today, our profession has acquired an invisible position in the business and economy. ICI continuously aims at developing knowledge edge so that the members stand out to the expectation of the society. To achieve this objective, the CP committee has been continuously striving for the professional integrity and knowledge, which makes the word chartered accountant with excellence in service. In this direction, CP committee has always been proactive to the emerging needs of its members, enabling them to protect and challenge it effectively by organizing CP committee and providing adequate opportunities. The program for this evening is as follows. We have two sessions for 1 hour each, and the topic essay first session is essay 402. This is about audit consideration relating to an entity using service organization. And the second session is about how to face GST show cause notice and its reply. Our eminent speaker will talk about two above mentioned emerging areas of professional interest. Right. Now I will give introduction about our first faculty. Our first faculty is CA Dhruvin Pankaj Kumar Talati ji. He became a chartered accountant and company secretary at the very young age of 21, right? And he has been teaching law and audit at CA foundation level and company law level, subject at CA inter and final level. He has also delivered multiple sessions on various topics across multiple platforms at various countries, right? Now, I will hand over the mic to CA Dhruvin Talati. Yes, Dhruvin.
So very good afternoon, sir. Thank you so much for the warm welcome and introduction. So I would like to thank, first of all, CP committee for inviting me to deliver the session on very interesting standards of auditing, yet so underrated as a 402. And with your permission, sir, shall I begin with the content?
Yes.
Thank you. So I hope the screen is properly visible.
Yes, sir. Visible.
Okay. Very good afternoon, everyone. So today, we are going to learn about the topic SA 402, which talks about the audit considerations, wherein the entity is using the service organization. Well, before we begin with that essay, let us first have some overview about why is this essay required to be understood. First of all, we are all very much aware about the audit process. We can generally divide it into three different phases, right? The first one being the planning phase, then the execution phase, and last one, obviously, final one, the reporting one, wherein we issue the audit report. In the planning phase, what we do is prepare an audit strategy, audit plan, understand the business entity, identify the risks of material misstatements, and all that stuff using the risk assessment procedures. In the execution phase, when we come to, we actually counter that risk and try to reduce the audit risk. And audit risk is nothing but the risk that our opinion might go wrong. And in the reporting final phase, conclusion phase, we report our findings in the form of opinion, right? So this entire audit procedure comes from SA 200, the overall objectives of the independent auditor. This objective says that auditors' objectives are twofold. Number one, to obtain reasonable assurance whether financial statements are free from material misstatements or not, and prepared in accordance with applicable financial reporting framework. And the second one is to issue the report on the same, that too in the written format. Sir, in order to ensure and to get the reasonable assurance so as we can give it to the users, what we need to do in the planning phase, as just discussed, what we'll be doing is try to identify the risks of material misstatements by understanding the entity. Now, important point, why are we dealing with different assays? The reason is very simple. In order to understand SA 402, in order to understand what answers are given by SA 402, we need to identify first what is the problem because of which SA 402 gains importance. That is the reason why we are going through overview of certain assays. So SA 315 is very clear that we need to understand the entity and its environment to identify what are exactly the risks of material misstatement. For that purpose, we as an auditor adopt multiple things, like we check the internal control systems of the entity. Next one, on the basis of that, we identify where and what are the areas wherein the risks of material misstatement is high. Along with that, we apply also many other audit procedures, including analytical procedures and all that stuff. And last one, to develop the audit plan. Fine. We try to identify the internal control system and its effectiveness. That is one of the important points here. As per SA 330, whatever risks that we have identified under SA 315, we try to respond to that risk. And by responding to those risks, what are we trying to do actually? We are trying to ensure that our audit opinion is accurate to reasonable extent, right? Because absolute assurance is not at all possible in the audit services. And that is exactly what we are trying to do as per SA 330. But now, after understanding these things, the questions are this many. Sir, what if certain services in the present era are outsourced by an entity to a third-party organization? We know that as per SA 210, agreeing the terms of audit engagement, auditor is having certain authority. So as per SA 210, so as per SA 210, auditor is having certain authority to interrogate the people which are within the organization, to get access to all the information, documents, whatever he wants that are within the organization, right? But now over here, the thing is that this is, let's say, an organization, the entity which is subject to audit, let's say ABC Limited, and we, let's say, for example, Mr. D is appointed as an auditor for this particular entity. Now the question is that if all the tasks of ABC Limited, if all the controls of ABC Limited are processing all the transactions of ABC Limited, then whatever information we want in order to form our opinion so as to obtain sufficient and appropriate audit evidence and all that stuff, we will be deriving within the boundaries of this organization, and that's never going to be an issue. It will be within our scope as per SA 210, within our authority. But now the question is, what if, let's say, ABC Limited has outsourced its certain activity to a third-party organization? Let's say, for example, XYZ Limited. What are the services outsourced? Accounting services, or it may be payroll services. It may be any other services which are relevant to the financial reporting aspects. How to check whether these transactions which are actually performed by XYZ Limited on behalf of ABC Limited are accurate or not? See, if these transactions were performed, if the accounting and payroll services were performed by ABC Limited itself, then Mr. D could have very well checked the internal controls which are used to process this kind of transactions and activities, and he would have ensured himself whether they are working properly or not, whether they are effective or not, efficient or not, and whether they are able to prevent material misstatements creeping into the financial statements or not. That would have been an easy task. But now, Since these activities are performed by some third-party organization, how can auditor determine whether these transactions are performed properly by XYZ Limited or not? Whether internal controls of XYZ Limited are sound enough to ensure appropriate and proper recording of accounting and payroll transactions on behalf of ABC Limited. Because any which way, whether they are performed by ABC Limited or XYZ Limited, these are going part of financial statements of ABC Limited, and they are subject to audit report by Mr. D. So even though they are processed by third-party organization, auditor is very much concerned about these transactions, since these transactions are affecting financial statements of the entity. Yes, I hope this question is very clear, that what is the problem scenario over here? What is the problem scenario over here? I hope this is very clear now. So looking to this problem, yes, these are the questions. What if entity has outsourced its core financial activities to some third-party organization? How to determine whether their internal control systems are proper or not, and how to get assurance whether they are performing tasks in a manner to enable true and fair view of financial statements or not. So to get answer of these questions, we as an auditor need to resort to SA 402, which talks about audit considerations relating to entity using the service organization. Yes, we are coming to these terms, service organization. What is exactly meant by service organization? And there are multiple other terms, and that's what our next topic is going to be. So to understand SA 402 appropriately, we are going to start with three basic level things. First, certain important technical terms which are used by SA 402 and which are also going to be used by me during the upcoming 1 hour webinar on SA 402. So we are going to understand the meaning of each and every terms. Next, obviously, objectives of SA 402. We are very well aware that whatever standards on auditing are issued, they are carrying some or the other objective, and they are important in a sense that they guides us why are this essays required to be resorted to be followed, right? And the last one, obviously, the relevance. So these are the basic things with which we are going to start SA 402. So again, to understand the important terms, we will again go back to an example. Again, sir, what was the example? We were having an entity, ABC Limited, and auditor was Mr. D, right? ABC Limited is the entity under audit. So as per SA 402, this ABC Limited is said to be user entity. And Mr. D, the auditor of the primary entity, the user entity, is called the user auditor. Sir, Mr. ABC Limited outsourced its activity, outsourced the activities to some other organization called XYZ Limited. This is the organization which is providing services to ABC Limited. So ABC Limited is the user of the services provided by this organization. Hence, ABC Limited is said to be the user entity, user of the services. And auditor of the user entity is called the user auditor. I hope these names are very clear along with the logic. Again, there are two more terms. Now, XYZ Limited, sir, say if ABC Limited is the user entity using the services, XYZ Limited is the service provider. Basically, this is called service organization or service entity, right? And the auditor of service entity, let's say, for example, any random Mr. A or Messrs. ABC, right? Whatever the case may be. Yes, if there is an auditor of whom we are going to take help in respect of user entities audit. So the person who is an auditor of service organization is said to be the service auditor. Okay, so again, the primary entity under audit is using the services of some third-party organization. Hence, it is said to be user entity. The auditor of the user entity is said to be the user auditor. The entity who is providing the services to the entity is said to be the service organization, and the auditor of such service organization is said to be the service auditor. So these are the four technical terms which we are required to be familiar with before starting SA 402, because these are the terms, technical terms which are going to be used throughout the essay to gain the understanding of the provisions which are mentioned therein. Okay. So yes, I think we are good to go now. Important terms. So what are the four important terms we just studied? These are the four ones: user entity, user auditor, service organization, and service auditor. What is user entity? Basically, the entity under audit. So that is auditee. User auditor, the statutory auditor. Service organization, third-party service provider. And service auditor is third-party service provider's auditor. Okay, shall we go ahead? Going on. Objectives. Now, what are the objectives behind introducing SA 402? So, what are the objectives? Again, objectives as per SA 402 are twofold. There are two objectives. What are those two objectives? Now, these are interesting. Let us first discuss this, and then we will reach to one conclusion, which is also forming part of the third part, that is relevance. See, what are the objectives of SA 402? Sir, SA 402 helps auditor to obtain the understanding of the nature and significance of services provided by service organization. SA 402 will help the user auditor to obtain understanding of services which are provided by the service organization to the user entity. Okay, that is the first thing. Next, and their impact on user entities internal control system. Whether user entities internal control system are affected, and if yes, to what extent? If yes, to what extent, so that it affects the financial statements of the entity indirectly by processing of certain transactions. So that is what we are going to understand, and thus identify the risks of material misstatements. And the second objective is, once we have identified the risks of material misstatement, all we are gonna do is, as we do in SA 330, counter, or we can say perform audit procedures to respond to the risks which are identified. So now, if we look at these two objectives, then it is very clear that first objective talks about identifying the risks of material misstatement. As per SA 315, it talks about risks of material misstatement in the entire entity. But SA 402 talks about specifically risks of material misstatement arising out of services which are provided by this service organization to the user entity. Very specific to that part. And as per SA 330, it talks about responding to the risk identified under SA 315, that is for the entire entity. SA 402 talks about designing and performing the audit procedures to respond again to the risks of material misstatement, but restricted to those risks which are relating to the services provided by the service organization to the user entity. I hope this is clear. So this conceptual clarity leads automatically to the next answer, the relevance. What is the relevance of SA 402? Relevance of SA 402 is very simple. It deals with practical applicability of SA 315 and SA 330. For why SA 315 and 330 are again repeated here, as we just discussed, the 315 and 330 are dealt with again here specifically for a unique case wherein entity is using the service organization. Right? So this is where we basically understand the concept about why SA 402 finds relevance to our understanding before we conduct an audit of any entity which is using the service organization. And it is very, very common nowadays that entity will normally outsource many of its activities to the third-party organization. The reasons could be various, like, for example, to save the cost or to get the benefit of expertise or whatever the case may be. But yes, this is very common nowadays that they will not do all the tasks in-house. They will hire a person or appoint an entity which is already doing it for many other organizations who are having specialization in that aspect, right? So they will just outsource it. And hence, it becomes important for us as an auditor, as a statutory auditor, as the user auditor, to get familiar with SA402, which can assist us in properly identifying the risk and responding the risk relating to the service organizations, so that our opinion again remains proper and appropriate, providing reasonable assurance to the users. Okay, so now we have understood the applicability. Okay, when will SA402 be applicable? But now we also need to understand that SA402 itself clearly says in certain situations, SA402 will not find any relevance. Okay, what are those situations? Now these are interesting. Account processing services which are provided by the financial institutions. Let's say, for example, entity is having bank account in a particular bank or any financial institution, account in the financial institution. And these are banking services are also provided by such financial institution, right? So if we consider in that way, sir, bank or financial institution is a service provider. So are you going to apply the same asset to that? Answer is no. So in case where financial services are provided by a financial institution, therein SA402 will not find relevance. So why so? We are going to come to that topic. Again, I'll answer to this topic once we are done with certain further aspects of this essay. So that at that point of time, it will be again much more clearer that why they have been clearly excluded from the scope of SA402. But as of now, yes, the financial institutions providing account processing services, they are excluded. Next, if broker is performing certain transactions on our behalf, again, they are maintaining our account. So they are also providing us services. So again, is SA402 applicable there? Answer is no. If our auditee is having an account with the broker, a demat account with the broker, and they are giving them services, then again, SA402 will not find relevance. It is specifically excluded. And the third one, again, this is important, audit of proprietary financial interest in other entities. Now, what is proprietary financial interest? Let's say, for example, I am partner in a partnership firm. So there is a partnership firm wherein me and Surat sir and Shrey sir, we all are partners. We three partners are having a partnership firm. Partnership firm is already audited. Okay. And now, as a partner, I will also gain certain share from the partnership firm. So now the case is, whenever my particular individual account is concerned, whenever my individual account is under audit, whether SA402 will find relevance there. Again, the answer is no. So over here, again, we are not going to deal this situation in a manner like where my accounts, whenever they are audited, then SA402 will not be applied considering partnership firm to be service organization. That will not be applied. Okay, again, why? We are going to get these answers subsequently. So these are the non-applicabilities. Whenever we talk about the approach, which is mentioned under SA402, it is very clear, 3-step approach, just what we do normally, planning, execution, and conclusion. Same is over here, planning, basically obtaining the understanding, right? So as per SA402, again, first thing that we are required to do is, as per SA315, what we do? Obtain the understanding. Same thing we are going to do here, obtain the understanding. Next, sir, as per SA330, we respond to risk. Over here also, after understanding the business and identifying the risk, we are going to respond to the same. And last one, so reporting as what we do under SA700 and SA705. 700 talks about unmodified opinion, 705 talks about modified opinion. So whatever the case may be, whatever audit evidence we have obtained, on the basis of that, we will determine whether to give modified or unmodified opinion. So that's going to be the approach. When we talk about the first one, obtaining the understanding, we are going to obtain understanding of what? Of the services provided, of the nature of services that are provided, whether they are material to the financial statements or not, or material also afterwards, first thing that we are going to check is whether they are relevant to the financial statements or not. Is it possible that there are certain services which are outsourced by the entity, but they are not relevant to the financial reporting? Is it possible? Answer is definitely yes. For example, security services. Okay, so security services, even if they are outsourced by an entity, monitoring services, even if they are outsourced by an entity to a third-party organization, they are not having any direct relevance and not having any impact on the financial reporting. Hence, auditor is not concerned with this kind of outsourcing of services. Auditor is concerned only about outsourcing of services which are having relevance and material impact on the financial statements of the entity. Okay, so obtain the understanding. Now, how can auditor obtain the understanding? So there are two ways available with the auditor. First one, he will try to find all the answers within his auditee. So his first scope is restricted to the organization under which of which he's performing the audit. So basically the auditee, the user entity. So he will try to find answers to all his questions from within the user entity. If he is not able to find any answers to the questions, then and then only he will rush outside. So basically, there are other means available with him. Okay, so first preference always will be to obtain all the answers to the question, to obtain all the understanding from within the user entity. Okay, so let us go through it, obtaining the understanding. The first approach, wherein the first preference will be obtain understanding from within the entity. Okay, so how can we obtain the understanding within the entity, or what information can a user auditor obtain? So basically there are four major kinds of information that he can get. Number one, nature of services provided. So we can always ask our auditee, that is the user entity, about what kind of services you are getting from the third party. You can always ask your client, right, that what kind of services you are getting. Even if they are not responding, you can also directly access and have your assessment what kind of services are being provided. Next, nature of relationship between the user entity and service organization. So the user entity and service organization, what are the contractual terms that they have agreed upon? Again, that understanding can be obtained by auditor within the entity itself. How? Simply by looking at the user level or service agreement, right? All the terms will be mentioned therein. So you can always take the contract, have proper reading of it, inspection of it, and you can get idea about what is exactly the contractual terms that are agreed upon. So we are going to discuss this point in detail in the next slide. Next, nature and materiality of the transaction process. So once we know what are the services provided, we also know now what are the terms that are agreed upon. We can easily determine whether these services which are provided by the third party organization are actually relevant to the financial statements or not, right? Whether they are material enough to impact the user's decision or not. So that is what we can always determine in this part. And the last one, degree of interaction between the user entity and service organization. So basically, we can also decide, or we can also determine that to what extent both the organization, the user entity and the service organization are interacting. So why interaction finds importance? So see, there are two scenarios which I'm putting in front of you. One, that is a user entity who has outsourced services to the another third-party organization, service organization. Service organization itself records all the transactions without asking user entity, right? So whatever, let's say, bank feeds it is finding, it is recording it simply on the basis of it. Whatever transaction, whatever vouchers it is receiving, it is recording it simply on the basis of the vouchers, not checking any authenticity, not checking any authorizations. However, the next method is, the next scenario is wherein user entity, first of all, authorizes the voucher. The authorized person, the responsible person, puts his signature in the voucher and thus authorizes the transaction. Once the transaction is authorized, only and only after that, service organization is recording it in the books of. What is more appropriate? Obviously, the second scenario, because there authorization is properly checked. So assertion, basic assertion of authorization, completeness, these all will be ensured therein. An auditor needs to ensure that whether service organization is following the second scenario or not, which is more favorable and preferable as well. That is what is discussed by this term degree of interaction. Whether user entity and service organization are connected with each other for the purpose of recording the transaction or not. Or service organization is doing it ad hoc without any authorization or communication from the user entity. So that will again give the auditor an exact idea about what is the risk of material misstatement in those particular transactions. So yes, as we discussed that we are going to discuss this point in detail, nature of relationship between user entity and service organization. Nature of relationship. So whenever we are reading the contractual terms, the contract, the terms of agreement, which are agreed by the user entity and service organization, therein we can find again certain important things here. Number one, what are the responsibilities of service organization as agreed by both the parties? That will give auditor an idea that what exactly they are required to do and what they are doing. And if there is any discrepancy, that means the risk is high. Okay, next, indemnification to the user entity in case of failure. So if there are any terms which are agreed upon, which says that if service organization is not doing their work properly, they are liable to compensate, or I'll not use the word compensate, they are liable to indemnify the user entity. Sir, how is it important? Well, it casts an additional responsibility and a sense of ownership to the service organization, and that will ensure that they are working more appropriately. Okay. Next, agreement on providing report and its type. So what kind of report? Sir, do service organization provide any report to the user entity? Answer is yes, which we are going to discuss in the later parts. Next, whether user auditor has rights to access the accounting records. Now, normally records are of user entity, right? Accounting records are of user entity. So service organization will definitely provide the access to the same to the user entity, because after all, records are of user entity. But the question is whether the user auditor is allowed to have access directly to the records of user entity which are maintained by service organization or not. The question is that if there is a user entity and service organization and there is a service auditor, always user entity will have access here. They will have access because it is after all their data. But now the question is whether whether user auditor can have direct access to the user entity's data which is maintained by the service organization or not, because direct access will again enhance the reliability of the data, right? So yes, again, that plays an important role. And whether agreement allows direct communication between the user auditor and service auditor or not. So both the auditors, can they communicate internally with each other or not? Even if that is agreed by both the parties or not, that has to be determined by the auditor. What if auditor is unable to obtain understanding from within the entity? Now that leads us to the core part of the standards on auditing, SA 402. What is the question? We want to obtain the understanding. Understanding we can obtain by two ways, from within the user entity or by other means. We tried to identify and obtain the information from within the entity, but now we are not obtaining sufficient understanding. What next? So there are four other options available with the auditor. There are four other options available with Mr. D in our example, continuing, right? So Mr. D, what he can do? He can, first one, obtain type 1 or type 2 report. Now, what are these type 1 or type 2 report? We are going to discuss in the next slide. But yes, these three other means are very easy to understand. So what we can do if we are not able to get the information from the service organization, we will directly, from the user entity, we will directly contact service organization. If allowed by the terms of agreement, we will directly contact the service organization and ask them the relevant questions, what we what we think are relevant to help us understand the entity. That is the first thing what auditor can do, directly contact the service organization. Next, sir, if contacting is not enough, you can directly visit the service organization. And there you can perform the test of controls. Ideally, what is the question? Ideally, what is the question? We are having doubt over the internal control systems of service organization. We don't know whether internal control system of service organization are appropriate or not. So what are they asking us? User auditor, number one, can inquire by contacting them. Okay, simply connecting with them and inquiring the same. Second one, you can directly visit. So user auditor will visit the service organization and he himself will check the internal control system. So test of controls. He will perform test of controls over the controls of the service organization. So that's the third option available. And last one, using the another auditor to perform the procedures on his behalf. So this point, the third point was talking about auditor can go to the service organization and perform test of control. If he do not want to do so, or if he is not available, can he ask any other auditor to perform test of control on his behalf? Answer is again yes. So he can send someone else as well. Again, but there are certain restrictions, like he should also be an auditor. Possessing same qualifications and independence as if this person is possessing, the user auditor is possessing, right? So if he is fulfilling all those criteria, again, that can be done. Okay, but yes, sir, this second, third, and fourth point are very clear, very simple. You can either contact them by connecting with them through letters or through written communication via mail or telephone or whatever the convenient means is. Second, you can visit the organization and perform test of control. Or third, you can send someone else and ask them to perform test of controls on your behalf. But what is again this first point, which is talking about type 1 and type 2 report? So basically, these are the reports. These are the reports which make up this asset relevant. So service organization will have a service auditor, right? And we have user entity and user auditor. Now, what we are the user auditor, right? Hence, SF 402 is applicable to us. We are user auditor. That is the reason why SF 402 is required to be followed by us, right? And we are primarily concerned whether service organization possess such internal control system which are sound enough to process the transactions of user entity in appropriate manner or not. That is the question which is raised by user auditor, right? For this, he can perform other three means, but what is the report? So one of the method is to obtain report from the service organization. So service organization will issue an audit report. I will not say audit report, but yes, an assurance report. It will be an assurance report which will be issued by service auditor to the service organization. So like auditing standards, we also have got assurance engagement standards, right? So that is where this relation between service organization and service auditor falls under the scope of assurance engagements, which is covered by standards on assurance engagement 3402. So this is the assurance engagement which regulates, which provides standards with respect to service auditor providing assurance services on the internal control system of the service organization. So basically, what is this assurance engagement about? Auditor will provide reasonable assurance again, but not on financial statements, on internal control system. I hope this is clear. So service auditor is providing assurance on the working of internal control system. This will be issued in the form of service auditor's report. This will be issued in the form of service auditor's report. Okay, and this service auditor's report will be issued by service auditor to the service organization, which in turn service organization will provide to the user entity, and that will be provided to the user auditor. Now it becomes easy for we as an user auditor to determine whether internal control systems are working properly or not. Answer is yes, to some extent. Why? Because now there is another person who is also a qualified professional who has performed his procedures on assurance engagement, which is regulated by definitely some standard, right? So he is a qualified person. He has performed the procedures on the internal control system of service organization using certain established standard, and on the basis of that report, now is it like easy for the user auditor to determine whether controls are working properly or not? Answer is yes. So this is basically service auditor's report, which they are talking about type 1 or type 2 report. So yes, this report which is issued by the service auditor can be of two types, type 1 and type 2. Now what is the difference to that we are going to study, that we are going to understand. Okay, so type 1 or type 2 report, I hope this is clear. Service auditor will issue report to service organization, which in turn will be issued to user entity, in turn to the user auditor. So that is type 1 or type 2 report. So now what is this report? What is this report? So let us go through it. First, let us understand about the type 1 report. So now type 1 report, we need to understand three things over here. So we are also going to understand what is type 1 report, what is type 2 report, and we are also going to understand simultaneously what is the difference between these two kinds of report. And then at the end, we will conclude what is more relevant to the user on type 1 report or type 2 report. Okay, so type 1 report says that here, first thing, management will provide description. Management of whom? Management of service organization. So management of service organization will provide certain description about what is their entity's system, what system are they following to provide such services to the other persons, what are the control objectives, and how they have maintained the internal control system. So basically, we all know that management, whatever they will say, that will always be going to be perfect system, right? So why will someone believe the description which is given by the management? Because this description which is given by the management of service organization, that will be checked by the service auditor report, and he will issue his assurance thereon whether this description provided by the management of service organization is appropriate or not. And further, he will also give assurance about whether the controls that are designed by the service organization are suitable or not. But there is one problem here. Such description which will be given by management will be as on date. Matlab, if we are asking for a report and they are saying that as on 31st March 2023, internal control system of service organization is working very well. But we always know that transactions were performed throughout the year, throughout the period from 1st April 2022 to 31st March 2023. Right? Normally, all the transactions are performed throughout the year. If it is about the stock counting, then it has to be on a particular date. But we know that this kind of activities are not going to be outsourced. Activities that are going to be outsourced will be daily or routine activities. And for that, we need, as a user auditor, we need assurance whether controls were working appropriately or not throughout the period. Right? So that's where type 2 report comes into play. Type 2 report differs in two ways from type 1 report. Type 1 report was saying description of the internal control system. Management will describe how is internal control system, and service auditor will say whether the description given by them is appropriate or not. But we are not concerned about the description. We are not concerned about the design of control. We are concerned with whether such controls that you have prepared are working properly or not. That too throughout the entire period. That two answers which are lacking in type 1 report user auditor will find here. Check it out. So, sorry. Description by the management of service organization about service organization system, control objective, internal control system. These are same as in type 1 report. What is additional? Management will also provide description over the operating effectiveness of the internal control system. That's what is important for the user auditor. We need to know whether transactions are processed properly or not. And for that, we don't only need what kind of controls you have placed. We also want to know whether they are working properly or not. Right? So yes, that is given in the type 2 report. Such description will be for internal controls throughout the specified period. Matlab, over here, that will be for entire financial year, 1st April to 31st March. Answer is yes. Again, that is relevant? Yes. Again, sir, that is one more problem. This is only description which is given by management about the operating effectiveness. How can again we rely on it? Because type 2 report also says that over this description, service auditor will not only give reasonable assurance by checking it, whether description is appropriate or not, but over here, service auditor himself will perform test of controls, and the results of such test of controls will be communicated by that auditor in the type 2 report. So now, when we talk about type 2 report, it says whether controls are working properly or not. Service auditor will check himself whether controls are working properly or not. He will perform test of control procedures and accordingly determine whether they are appropriate or not. And he will issue an audit report thereon. Further, such report will be for the entire period under consideration and not limited to a specified date. So now, answer to our question is very simple. What is more relevant to the user auditor to determine whether service organization is working properly or not? Type 1 report or type 2 report? Definitely, type 2 report is going to be of utmost importance, and that will be the only relevant thing, because obtaining the report as on a specified date is not going to serve the purpose. So yes, we have completed the first part of the approach, that is about understanding the entity and understanding the services which are provided by the service organization. Next, we are going towards the responding to the assessments. Now, there are again certain questions. We have obtained type 1 or type 2 report from the service auditor. Is it reliable? There are always chances that it is, because of certain factors, not that relevant and reliable. So that's where we as a user auditor are going to respond to such kind of risk. So what can we do therein? Let us check it out. Considerations for report to be sufficient and appropriate. So only merely receiving the report from service auditor is not important. There are also certain other factors which you as a user auditor, we as a user auditor needs to ensure. What are they? Number one, service auditor's professional competence. We need to check that whoever service auditor is, who has provided the service audit report, whether that person is competent or not, whether he is possessing proper appropriate qualification or not, whether that person is a perfect fit for performing this duty or not. Next, whether such person has performed the necessary procedures and prepared service audit report under or as per the assurance engagements which are given by the authority or not. That is again required to be checked. Adequacy of standards under which such a report is prepared. Next, period of report is appropriate to the audit or not. So we are going to discuss this again in the upcoming slide. Because whatever period under audit we are checking the user entity, we need to know the internal control systems are working properly of the service organization or not for that same period, right? So if the periods are different, again, that is not going to make sense to us. And the last one, whether the results of test of controls are relevant to the audit assertions or not. So in case type 2 report is issued, we also need to check that in type 2 report, service auditor has performed a test of controls. Now, those test of controls, whatever controls are checked by the service auditor, whether such controls and their testing is relevant to the services which are provided by the service organization to the user entity or not. Okay. Again, period of audit, that finds relevance. So we are going to understand it with example. Let's say we are having two companies, Tata Power which is a company following the financial year, let's say 23-24. And there is another service organization called Druvin Limited, which follows the calendar year. So yes, making activities. It is very well possible that the activity which is outsourced to a particular organization is not within India. Even that is possible, right? So yes, let us take an example. Okay, by service organization is following calendar year. First scenario, even though service organization is following the calendar year, they are providing a service audit report for entire financial year 2023-24. Is it valid? Okay, user auditor over here is having no problem at all. Why? Because he is getting the service audit report for entire financial year under consideration. So his task is appropriately done. Next scenario. Next scenario says service organization gives report for year ended December 23. Because Druvin Limited's calendar year ended on 31st December 2023. So they have given report for 1st April 2023 to 31st December 2023. What is the problem over here? Problem is that we are yet lacking whether the controls of service organization were working appropriately for April 24 to March 24 or not. So what will user auditor do over here? User auditor will adopt other means. We check there are 4 means available to the user auditor. Number 1 is obtaining the report. But if report is not available, he's also having certain other options, like he can contact the service organization and ask them how were these controls working properly. He can himself visit the service organization and perform test of controls, or he can also appoint some other person to perform such test of controls for these 3 months on his behalf. Agreed? Next. So what if service organization gives semi-annual reports, 6 months reports, and the last 6 months, October to March report is not made available. So it is prepared, but it is not made available before Tata Power's final audit report. Means before our audit report, they are not making it available. Again, what can auditor do? So first thing is he can adopt the other means. As we discussed, 3 other means: contact them, perform test of control himself, or appoint some other person. But to perform test of control himself as well. In that scenario, the last resort available with the user auditor is to consider its impact on the audit report. So what will be the audit report's impact that we are going to study in the upcoming part. So I hope this is very clear. Period of audit report is definitely relevant to the user auditor, because this will determine whether user auditor obtains sufficient and appropriate audit evidence on the working of internal control system or not. Again, there is a concept called sub-service organization. Now, what is sub-service organization? Yes, correctly identified by you. That what if user entity outsources the services to some third-party organization? That organization is service organization. But what if such service organization also outsource certain of its activities which are part of user entity to some other organization? So it's like subletting. It is like sub-outsourcing. So that sub-outsourced organization is called the sub-service organization. So over here, ABC is outsourcing the activities to XYZ, and out of these activities only, certain activities are outsourced to some other party, let's say MNP. So now this MNP becomes sub-service organization. Why? Because this organization is processing the services of ABC Limited, which were first outsourced to XYZ, which in turn are outsourced to MNP. So now in that scenario, how can you apply SA 402? So there are 2 situations possible over here. Number 1, whatever service auditor is issuing the audit report, service audit report, there are 2 ways of including it. Number 1, he will issue audit report in such a manner that it will cover test of controls on internal controls of both these entities. If this is the case, again, user auditor's task becomes easy. He gets an idea about what are the internal controls of both the organization. But what if sub-service organizations' internal controls are not covered here? Service auditor is providing assurance on the internal controls of XYZ Limited only and not on MNP. Then again, SA 402 says, don't worry, user auditor can again directly contact MNP, sub-service organization, or he can visit there and perform test of controls accordingly. Right? So it is very simple concept. And what are they saying for that? So there are two methods. Number one, inclusive method. Inclusive method means service audit report will include reporting on the control set, sub-service organization also. But there is another method, which is carve-out method, as we just discussed. If it is a carve-out method, then service audit report will not include the assurance on the controls of sub-service organization. And in that case, user auditor is given rights by SA 402, then he can apply same audit procedures for sub-service organization as well. So that will not be left out. Final part is reporting. So we have gone through understanding, we have gone through the responding to those risks. Now, finally, even after responding the risk, what will be the final impact on the reporting? So report, we know there are only two kinds of opinion possible. Number one, modified, and second one is unmodified. Yes, modified has got certain other parts, 3 types. But right now, we are concerned with when to issue unmodified opinion. Definitely when auditor is very well satisfied that internal control systems of service organization, sub-service organization are working appropriately, and there is no evidence available on face which suggests that there are certain material misstatements in the financial statements of the user entity. In that case, he will issue unmodified opinion. However, there are 2 scenarios wherein he might issue modified opinion. Number one, he finds sufficient and appropriate audit evidence that everything is not well, something is fishy, there are material misstatement, then he will issue modified opinion. The second case is, we just discussed, that it is highly possible that he's not receiving the type 1 or type 2 report. He's also not able to perform testing on the controls. So in short, he's unable to obtain sufficient and appropriate audit evidence at all. Again, in that case, he will resort to either qualified or disclaimer of opinion, depending upon the pervasiveness of the misstatements that might be there in the financial statements. But in any case, one thing is required to be ensured, that service auditors report will not diminish responsibilities of user auditor. Matlab, what does it mean? That even though user auditor is using the report which is given by the service auditor, he cannot claim later on that I relied on the service auditor's report, and hence if there is any discrepancy in my opinion, that it is not my fault, it is service auditor's fault. That is not allowed. So user auditor retains all the responsibilities, and he will be the sole person responsible for whatever opinion he is issuing in his audit report. Right? So with that, on that note, we are completing SA 402 entirely. There is restraint of time, or else I could have also shown the this report which is issued by practically by some auditor, service auditor. But yes, sir, we have completed SA 402 appropriately, and I hope this has added value to your knowledge regarding how can you approach as an auditor of a user entity wherein they are using the services which are provided by the service organization.
Okay. So thank you, Dhruvin Talati ji. So thank you for this wonderful webinar. And I think how to drafting report for service organization and sub-service organization, and overview about SA 402. Right. Thank you, Dhruvin ji. Thank you. Now we will have a second session, right? That will taken by Ankit ji. Right. So Ankit ji, I will give you introduction about Ankit Somani ji. Is from Ajmer, right? He actually is a chartered accountant. He was appointed as a special invitee of GST and Indirect Tax Committee of ICI at All India level. and he has been associated with various committees of ICI and was appointed as the chairman for 5 committees. He has also delivered more than 650 sessions on multiple topics at various platforms. Right. So now, Ankit ji, the handed mic is over to you. Please continue. Continue for second session, please.
Thank you, Suraj. Am I audible?
Yes, yes.
At the outset, I am really grateful to CP committee for providing this wonderful opportunity to deliver on the pertinent topic of handling show cause notices and appeals under GST. Plus, I am very much sure that all the participants must have learned a lot from Dhruvanji, my co-speaker. So basically, I would like to start with like what is show cause notice and what is the importance of show cause notice. Show cause notice sets the law in motion. Any adjudication, any kind of adjudication, be it GST, be it income tax, it will start only after issuing show cause notices by the appropriate authority. Now, whenever I mention
Recording in
notice,
progress.
you also get an intimation, particularly in show cause notices issued by central authorities, that your personal hearing is fixed on dash date. Now, in many notices, we have seen there is a line personal hearing dated dash and dash and dash. Like 3 dates are mentioned directly in show cause notices. Those are never considered as 3 personal hearings. Moreover, show cause notice must be very particular. It should not be vague. If in case there is any issue in relation to details of assessee or proper officer or whatever we have discussed, then you must challenge the notice then and there itself. You must write those points in your preliminary reply itself. Otherwise, by virtue of section 160 subsection 2, you will not be in a position to raise the topic again, to raise the matter again, to raise the issue again, even at higher levels. Majorly, show cause notices are being issued under section 73 or 74 or 76. Likewise, we have all seen that show cause notices have been flooded at least for financial year 17-18 and 18-19, and in majority of the cases, ASMT 10 has not been issued, right? So that is also one of the big litigation point. For another 10 years or something, what I can perceive from my utmost humbleness, that majority of the show cause notices would be referring to ITC related issues, or whether this transaction would be covered under the ambit of supply or not. And third category of show cause notices would be whether this type of transaction would be covered under this HSN or another HSN, basically HSN classification errors. So these are the major issues for which show cause notices would be issued in next 10 years or something, right? So with this limited time frame of 1 hour, I'll try to make the justice, and I would like to share my screen. Sir, I hope my screen is visible. Surajji?
Yes, yes, visible.
Okay.
No, yes, yes, visible now.
Thank you, sir. Basically, let us discuss some in very short summary, what is Section 73? What is Section 74? All those kinds of notices, all those kind of show cause notices which are covered under Section 73 or 74, they are arising out of 5 reasons. Now, what can be those 5 reasons? First point is tax not paid, another tax short paid, erroneously refunded, ITC wrongly availed, or ITC wrongly utilized. Only these 5 areas are covered in either Section 73 or 74. But in both the sections, there is one very thin line of difference, and that is very, very, very important. Now, Section 73 deals with all those cases which are in relation to any area other than fraud or any willful misstatement or suppression of fact, right? Whereas Section 74 deals with these areas only. So this is the basic difference, but it is very important. Show cause notice can be issued only after a proper inquiry. Ideally, ASMT 10 should be issued, then DRC 01A should also be issued, pre-show cause, right? Show cause notice must be in writing and unambiguous. Show cause notice must be a proper notice and not any kind of communication. Like we all are aware, for any kind of communication, DIN must be mentioned on all kinds of documents issued by the department. It must be properly served. As far as serving of show cause notices or serving of any kind of communication by the department is considered, we all are having too much apprehension that where these notices or where this communication will be issued, where this communication will be done, whether it has to be served physically or it can be uploaded on the portal also, whether only uploading on portal is sufficient compliance or sufficient serving of the notice or not. All these areas are really very dangerous. But as far as Section 169 is considered, servicing of notice can be done even through portal. It can be done even in physical mode, or if the assessee is not present there, not present at the premises also, then it can be pasted on the walls of the assessee, right? Or the registered office. Then in case the assessee is not known, it can be even published in newspaper, it can be even handed over to authorized representative, something. So all these considerations are clearly mentioned in Section 169. This is basic summary of Section 73, 74, and 76. 73 and 74 we have already discussed impartially. 76 deals with those areas in particularly whereby the tax has been collected by the supplier, but it is not paid off to government. Now, how and why we can tell this? This is very important aspect, because what is happening is, in many of the cases, you will visualize later on that in 1718 or 1819, 1920, in the initial years of GST, many of the assessees were not in a position to identify whether this transaction or this area or this particular receipt would be covered under the ambit of GST or not. And in such cases, the income tax return filed by them, includes other income, just for the purpose of maintenance of their taxable income. They have included other income also in their income. So such other income cases would also be covered under the ambit of GST. Now, whatever amount of receipts has been done by the assessee, such will be considered as inclusive of tax. And by the way, one very important point to be noticed, that under Section 76, there cannot be any time limit for the issuance of show cause notice. We all are aware that for financial year 17-18, notice under Section 73 cannot be issued now. Particularly for financial year 18-19, under Section 73, notices can be issued only up till the end of this January 2024. Only till then, Section 73 show cause notices can be issued, right? As far as Section 74 is to be considered, the order must be passed. I repeat, the order must be passed within 5 years from the date of end of annual return. From the date of end of annual return, or the filing of annual return, or the last date of filing of annual return, or the due date of filing of annual return, in whichever sense you are going to accept the same, right? So as far as financial year 17-18 is to be considered, the last date or the last due date or the extended due date of annual return for financial year 17-18 was 5th or 7th of February 2020, From there on, 5 years to be counted for order, right? And hence, notice must be issued under Section 74 6 months in advance. 6 months in advance. Like, say, for example, 5th of February 2020 was the due date for annual return for 1780. Within next 5 years, order under Section 74 must be issued, right? So 5 years gets completed on 5th of February 2025, 6 months beforehand. So the last date to issue show cause notice under Section 74 for financial year 17-18 boils down to 5th of August, 5th of August 2024. This 5th of August 2024, right? For financial year 17-18 and proceeding further, the minimum penalty, in Section 73, the minimum penalty in Section 73 need not be raised in case the amount is deposited or the amount demanded is deposited within 30 days of issuing of show cause notice. But in Section 74, the scenario is different. Whenever we are talking of 74, in case show cause notice is not issued, but you are depositing the same, then minimum 15% penalty would be there. There cannot be any point of zero penalty in Section 74. In case show cause notice is issued and you deposit the demand completely with interest and penalty also, right? So in that case, minimum 25% penalty would be there. In case 30 days have been passed after show cause, minimum 50% penalty is there. And in case order is passed, then minimum 100% of tax liability, penalty up to 100% of tax liability would be there. Under Section 76, 100% of tax liability penalty would be equal to 100% of tax liability. Likewise, as I initially mentioned only, that your major show cause notices are in relation to input tax credit. So let's boil down to majority of the time for today's session for input tax credit show cause notices, right? Whenever you receive any show cause notice pertaining to input tax credit, the first thing you should do is just check whether all the conditions of Section 16 subsection 2 has been fulfilled or not. Now, this is very, very important. What I would like to refer here is that in case all the conditions of Section 16 subsection 2 are fulfilled, then your right or your eligibility to claim ITC gets fulfilled at initial levels at least, right? So what are those conditions? Let's discuss one by one. First point, the recipient must be having tax invoice. The recipient must be having tax invoice, right? Now, whether such tax invoice must be in physical hard copy or it can be in soft copy. Sir, it can be even soft copy, but it must be digitally signed. Only image of physical hard copy of an WhatsApp image, only of physical hard copy cannot solve the purpose. Second important point, second important condition for availing ITC is the goods or services must have been received by the recipient. 99% of the show cause notices dealing with fake invoicing depends on this 16 subsection 2 clause B. Next point is 16 subsection 2 clause C. Now it deals with situation in which the tax has not been paid. Like it starts like subject to section 41, the tax on such supplies has not been paid. Be it to be paid by a supplier or paid by yourself under RCM as well. D point, it mentions he has filed the return under section 30. Now who is he? This he belongs to recipient. Sometimes department issues a notice that the supplier has not filed the return. Sir, particularly in financial year 17-18 or 18-19 or 19-20 also, or in financial year 19-20 also, there was no link, nothing in the act which restricts as a recipient when supplier has not filed his GST R1. Moreover, this section 16 subsection 2 clause B deals with section 39. He has filed the return in section 39. GSTR 3B. In simple cases, the cases in relation to ITC deals with 2A versus 3B mismatch notices. right? Particularly for financial year 17-18 and 18-19. There is one circular issued on 27th of December 2022, circular number 183. Now, basically, just we have discussed those four conditions pertaining to 17, 18, and 18, 19. Those four conditions. What are those four conditions? First condition, you must be having tax invoice. Second, you must have received goods and services. Third point, supplier must have paid the tax in simple terms. And fourth, you must have filed the return under section 39, meaning thereby you must have filed 3B, right? Now, particularly for these four conditions, out of these four conditions, two conditions are already in your control. You must be having invoice and you must have filed GSTR 3. The other 2 points, first point, like supplier must have supplied goods or services to you. Second point, supplier must have paid the taxes to government. These two points are to be mentioned by the supplier in his at his letterhead, right? For the purpose of claiming or availing the benefit of any ITC mismatches between 2A and 3B for financial year 17-18 and 18-19. You can take the advantage of circular 180. In case the issue is in relation to financial year 2019, 2020 and 2020, 2021, then you can take the benefit of circular 193. Again, almost on the same lines, but in this, even reference to Rule 36 sub Rule 4 is being there, right? So, what is exactly about Rule 36 sub Rule 4? Like there were conditions. First time it was issued on 9th of October 2019, and it clearly visualize a scenario whereby whatever amount of ITC is visible in 2A, whatever amount of ITC which is visible in 2A and you are eligible also. So let's point it as eligible ITC. So whatever eligible ITC is visible in 2A, you can avail extra 20% over and above the one visible in 2A, right? And this was from 9th of October 2019 to 31st December 2019. For whole 2020 calendar year, from January 2020 to December 2020, the limit was reduced to eligible to a plus 10%. From 1st of Jan 2021, the limit was reduced to eligible to a plus 5%. And from 1st of April 2021, the limit was reduced only to eligible to a only. Although such a portion was brought into Act through GSTR 2B, with the introduction of GSTR 2B, and it was made part of Act also and it was made applicable also from 1st of Jan 2022, because till then there was no possibility that you have to compulsory or mandatory comply with GSTR 2B, and it was not made part of Act only, it was only made part of rules. Another point on which show cause notice are being issued, like in case you have received goods or services from a supplier, you have paid the amount to the supplier, he has also paid the tax to the government. I am referring to a situation in which the supplier has also paid the tax to the government also. But later on, the registration of supplier was cancelled retrospectively. Now there can be a number of factors involved in this. First important point, let us assume department went to the premises of such supplier and he was not found at the premises, so his registration was cancelled retrospectively. Another point can be he could not file the GST returns, and for a considerable period of time, say for example 2-3 months, and department cancelled his registration retrospectively. Another point can be he is suspected to be from the side of department. I'm not saying exactly proved, but he is suspected to be involved in the chain of fake invoicing. Again, this can be a situation in which his registration got cancelled retrospectively. So these can be the some of the areas in which his registration was cancelled. Now, whenever you get such a show cause notice from department that the registration of supplier was cancelled retrospectively, although he might have supplied goods to you, you have availed the credit, you might have paid the supplier also, he must have paid the tax to the government also, but still credit will be denied. So you can note down a very important judgment LGW Industries, Calcutta High Court judgment. Another judgment, Suchita Kundu judgment. This is again very promising judgment of Calcutta High Court. Another very recent judgment of Calcutta High Court, passed in this December only, was of Suncraft Energy. Right. So again, Calcutta High Court gave a favorable view, but the department went to Supreme Court. Supreme Court rejected the SLP on the ground that the amount is not very much considerable for the purpose of Supreme Court to adjudicate on the same. It is not a case as if Supreme Court has agreed on the view, right? But the SLP of the department has been rejected. So again, this is very promising judgment. Another judgment for 2A versus 3B can be, one very promising judgment even for the next years. Like for 4 years, it has been mentioned already through circulars also. But for next years, there can be a judgment of Wipro India Limited, which was passed in January 2023, Karnataka High Court judgment. Another area whereby you are getting notices is whereby supplier has not paid the taxes on such supplies. Now, in case this is a situation whereby supplier has not paid the taxes and whereby it was a mandatory part of act, from day one in CGST Act under Section 16, subsection 2, clause C, like we have just discussed, right? So, what can be your reply on this part? Now, this is again very challenging part. I'll give you some 2-3 instances, and this will be very favorable for the assessees, right? In pre-GST regime, I repeat, in pre-GST regime, there are two important case laws. One is KK Industries, KK Industries, excise law regime, right? Supreme Court judgment. Another judgment is Arise India Limited. Now, what happened in both the judgments is, particularly in Arise India Limited, Delhi VAT Department refused the ITC to Arise India Limited on the pretext that the supplier has not paid the element of Delhi VAT to the authorities, to the department, to the government, right? And hence the ITC will not be eligible for receipt. Surprisingly and very promisingly, Delhi High Court gave a positive view on this, and Delhi High Court gave a favorable view to the recipient on the pretext that at least the recipient has paid the due taxes to the supplier. Now, if supplier is not known, supplier is nowhere to be found by the department, that is not the fault of recipient. And the tax must be received, tax must be recovered only from the supplier. There cannot be any fault of recipient on this. Delhi High Court gave a favorable view in favor of recipient, I mean. Department went up to Supreme Court. It applied for a special leave petition in Supreme Court. Supreme Court upheld the view of Delhi High Court, and hence this judgment is again belonging to Supreme Court, Arise India Limited, right? Now, in post-GST regime, again there are 2-3 judgments, like you can refer to Madras High Court DY Bethel Enterprises, in which again Madras High Court strongly gave a view whether recovery proceedings have been initiated against the supplier. Now, from where this angle has come into picture? Because see, recipient contended in High Court that in case supplier is being found, then whether the department is going to leave the supplier and not recover the tax on it. Department clearly said, no, we are going to recover the tax from it. Second point, whether department is not going to recover the interest from the supplier. Department said, no, we are going to recover the interest also. Then the recipient said in High Court, sir, there has been only one transaction. There has been only single transaction, single supply, right? Now, in case the department recovers the ITC portion again back from me, meaning thereby recovery of tax, and then again the tax has been recovered or will be recovered from the supplier also, then on a single transaction, 2 times tax will be recovered, right? So that will be absolutely, prejudicial for the interest of the economy as well as interest of the recipient as well. So Madras High Court gave a favorable in the favor of recipient that The main point is whether the department has initiated recovery proceedings against the supplier or not. Another point, another angle. Chhattisgarh High Court, Bharat Aluminium Company almost relied on the same things. Similarly, Calcutta High Court, this again recent judgment, which I just mentioned, which came in December 2023, which was rejected by SLP of the department was rejected by Supreme Court, right? So the same case can be referred here also. Another point, in case you receive notice under section 74, the first thing from your side should be you should challenge the basis. Where is the concealment? Where is the suppression of it? Ask for the relied upon documents against on the basis of which department has issued section 74 notice. Ask for the evidences. You can even ask for cross verification in case the department has received any information from some other client or from some other department or from some other document. So you can even ask for cross verification of the same. Likewise, two important notices are still remaining pending as far as input tax credit is considered. One important point is notices referred under section 16(4), meaning thereby the time deadline notices. You must have availed the ITC after the due date of next year, in case you must have filed the return later on after the due date has been passed. Second important type of notices are the department is demanding interest or even demanding the reversal of ITC in case the payment is not made in 180 days. So these two important notices are still on hold as of now. I'm going to discuss them in detail. Right. So let's discuss some other issues. First point, in case you receive some notices under Rule 36 sub Rule 4. Now, in case you receive any kind of notices, then you can always refer. Suppose if surprisingly but true, and in case you receive such kind of notices for financial year 17-18 or 18-19, or particularly for 19-20 for the initial half year, at least till 8th of October 2019, then all such notices are void ab initio because Rule 36 sub Rule 4 came into picture from 9th of October 2019 itself. Before that, there was no existence of Rule 36(4) only. Now, even later on period, like in 1920 remaining half year, or in 2021 also, or in 21-22 also for the initial 9 months, in case you receive any kind of notice for Rule 36 or Rule 4, you can always refer that such rule was on the basis of section 43A, which was supposed to come, the root section on which Rule 36 sub Rule 4 was based upon, but section 43A never came into picture. And due to this only, there was an amendment placed in the budget, and through which only GSTR 2B came into picture. Now, suppose in case you receive a query from the department or a show cause notice from the department considering the issue that the supplier has filed his GSTR 1 or GSTR 3B after 30th September or after due date of September or after 30th November or whatever, right? So in such cases, you should always refer and you should say that the preliminary condition under section 16 subsection 2 have been fulfilled, and particularly section 16 subsection 2 clause D, meaning the fourth condition clearly mentioned that he has filed the return under section 39. Now, who is he? This he belongs to recipient, not the supplier. Now, in case you receive a notice, RCM liability is not paid. Although time is not allowing me to go into the details of royalty notices, but still, if we would like to touch upon such notices, what if in case you receive a royalty notice, RCM notice for RCM liability not paid on royalty? Now, this liability can be in crores also. The tax element I am referring to, and almost equal amount of interest or even more than that in case the amount belongs to 17-18 or 18-19%, and along with that even 10% penalty, right? So what if you are being allowed to pay off such liability now and take the credit? Yes, I agree that it will again raise another point of section 16 subsection 4. Yes, I agree on that front, but still whenever there is any RCM liability, I repeat, whenever there is any RCM liability, as recipient of such goods or such services, you must pay off such RCM liability and you must take the credit also. On the other hand, you must prepare one self-generated invoice also, which is referred in section 31(3)(f). Right. So now, in case you have not paid your RCM liability, in case you have not paid your RCM liability, whether there can be any possibility, whether there can be any kind of possibility that you must have prepared already your self-generated invoice. See, main point is I was not even aware whether RCM liability would be there or not. Only that can be the reason that I have not paid off the RCM liability, and hence I have definitely not prepared the self-generated invoice as well. Right. So in all those cases, there can be a slight line that you prepare the self-generated invoice now, pay off the liability, and then take the credit also. Definitely, it will involve two important points. One is notice under section 16 subsection 4. One point. We are going to discuss that in detail. Second important point, there would be a liability, there would be a questioning from the department that you have violated the provisions relating to time of supply, for which no specific penalty or no specific liability is being mentioned in that. Against this, a general penalty would be levied on this. Can we now claim the ITC of RC which was not available before this we have discussed? What about ITC of previous years? Sir, whether previous year ITC can also be taken by this mechanism? Sir, by previous year, suppose if you are considering financial year 22-23, suppose if you are considering financial year 22-23, and if you have availed such ITC in next financial year, then it should be mentioned in table 8C and table 13 of GSTR 9 of financial year 2023. In case you have not mentioned the same, then it is going to be very difficult, right? Moreover, suppose if, what I would like to refer is, suppose if you have included such ITC, suppose we have included such ITC in the uh, in the expenses itself. Like say for example, there was an expense of rupees 1 lakh, and the GST element on the same was rupees 12,000. So overall, the invoice was of 1,12,000. Now, instead of availing the ITC of rupees 12,000, you must have claimed the whole expenditure. You must have claimed the whole expenditure in your P&L account. Right? This was the major mistake you have done. In that case, you can even refer, prior period item adjustment under accounting standard 5 as well. Right? You can even refer para 4 and para 15 of A5 for that purpose. Now, what if you receive a notice under Rule 86B, whereby your 1% of outward tax liability must be paid in cash? I repeat, your 1% of output tax liability must be paid in cash, and you have not paid the same through cash, but you have paid only through ITC. In case you receive such kind of notices, what is to be done? Sir, the main important point is, first of all, this rule is applicable only on those cases whereby the taxable, I repeat, the taxable outward supply exceeds 50 lakh rupees for that month. First point. Another point what I would like to refer here is, in case your income tax liability for previous 2 years, your income tax payment rather for previous 2 years exceeds 1 lakh rupees, then there will not be invoking of Rule 86B. Another point can be, in case at least two directors must have paid the income tax liability more than rupees 1 lakh in each of the two previous financial years, then again Rule 86B is not applicable. In case you are claiming refund from department under GST for previous 2 years, again this is not applicable, and so on and so forth. For 2A and 3B issues, we have already discussed Circular 183 and Circular 193. Treatment of discount. Now, this is again very interesting, and we are going to discuss this in detail. I'll try to cover all the major points of section 15, subsection 3, clause B. Another point can be of fake invoicing, which we just touched upon while we were referring to section 16, subsection 2, clause B, like he has received the goods or services or both. Now, how you can prove that you have received the goods? You have received the goods. Now, in case the assessee marks that I have the invoice, I have got the eBay bill, I have paid the supplier through banking mode only. The supplier has also paid the taxes. All these 4 points would definitely be prevailing if such transaction is of fake invoicing as well. So department is giving counter reply, like all these 4 points would be mentioned, would be there, would be existing even in the cases of actual fake invoicing. So what additional points you should be referring to? This is the main point. You should compulsory give. You should compulsory give the stock records. You should also mention. You should also provide the details of any, goods inward register in case you are having. You should even give the department all the tool receipts in case they are available with you. You should try and give all kinds of payment bridge, payment slips, kata parchi to the department for giving an evidence like the goods have been received by us. In majority of the cases, in case of some specific industries, sometimes the recipient clicks a snap with the driver, with the loaded truck, that we have received dash and dash and dash goods from dash and dash vehicle on this and this date. All such clicks are with date and specific timings also. Or you can even provide your CCTV recordings in case it is available. So all these can be specific points, all these can be specific areas, all these can be specific evidences in case you receive notices under fake invoicing, like the goods have not been received. What about services? What about services? Like you can never be having any payment bridge. You can never be having any toll receipts. You can never be having any, some clicks with drivers or some video recording of offloading of goods from the truck or another vehicle or trailer or something. Right. So what can be the additional evidence in case it is a matter of receipt of service? See, in all such kind of notices of fake invoicing in pertaining to receipt of services, you must give certificate from supplier. You must give, uh, likewise you are having GR note, goods received note. You must create services received note for all kinds of services received. Right, this can be a regular habit also for the assessees. Suppose if payment was not made within 180 days. Now this is the moot court question for another next 5-10 minutes, right? What if payment was not made within 180 days? Department is forcing upon to reverse your credit. Department is forcing upon to reverse your credit. Now listen very carefully. For initial 5-6 years, I repeat, for initial 5-6 years, there will not be any liability under this second provision of section 16 subsection 2. Now why I am referring you so strongly, just have a look. Now this is the main verbatim of second provision of 16 subsection 2. Provided further that where a recipient fails to pay to the supplier of goods or services or both other than the supplies on which tax is payable on reverse charge basis, the amount towards the value of supply along with tax payable thereon within a period of 180 days from the date of issue of invoice by the supplier, an amount equal to the ITC availed by the recipient shall be added to his output tax liability along with interest thereon in such manner as may be prescribed. Now I'll just read out some, or I'll again refer some important points again in this second provision. One phrase is where a recipient fails to pay. Now this fails to pay is very strong term per se, right? Now let's read this in another context. Just give 1 minute time. Provided further that where a recipient does not pay to the supplier something 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 the amount towards the value of supply along with tax within a period of 180 days. Suppose if a recipient does not pay. Suppose if a recipient does not pay. So we all are reading this part of section with a backlog in the mind that the words mentioned are where recipient does not pay. But please mind, the words mentioned are where recipient fails to pay. Where a recipient fails to pay. Now, what does this phrase mean? This phrase is very strong phrase. This phrase clearly means that the amount was due already. Rather, it was overdue and not paid off, and hence the ITC is to be reversed. Now, what if there is a contract or there is an agreement between supplier and recipient whereby the supplier has agreed on the terms to receive the money after expiry of 10 months? Say, for example, I have supplied goods and I have agreed that I will receive the payments. I'm happy to receive payments after 10 months, or let us assume after 1 year, right? So now I and you, being unrelated parties, being independent parties, we can, frame a contract at our own wish, and we can consider any kind of condition in our contract. There cannot be any stoppage from the point of view of Indian Contract Act, whereby I cannot set any payment terms more than 180 days. Now, suppose if I have given you a time period of 1 year, then how there can be recipient failing to pay? Because I have provided you a time limit more than 180 days already. So this is your one point. But let us jump to another point of this section only, where recipient fails to pay the amount towards the value of supply, along with taxable thereon within a period of 100 days from the date of issue of invoice by the supplier. Now, whenever you are going to elaborate this in detail, to the department, that department is always going to refer. What the department will say, sir, it is clearly mentioned. It is very clearly mentioned here that where recipient fails to pay, okay, but the amount towards the value of supply along with tax within a period of 180 days from the date of issue of invoice. So department is going to say that here it is not written 180 days from the end of 1 year, from the end of 10 months. No, it is not there. So department is going to say where recipient fails to pay the value along with tax within 180 days from the date of issue of invoice. Now, definitely the invoice has been issued promptly at the same time only. So definitely there is a delay, right? Now we are going to further part of this section. What it is written, just please read very carefully. An amount equal to the ITC availed by the recipient shall be, please read very carefully, shall be added to his output tax liability. Now it is written that the amount should be added to output tax liability. It is not written that the amount should be reversed, ITC should be reversed. No, it is mentioned that the amount should be added to output tax liability. In none of the notices I have seen that this amount is to be added to output tax liability. Rather, it is always referred with Rule 37 sub Rule 1 that the amount should be reversed, that the ITC should be reversed. But the law says different. And Rule 37 sub Rule says ITC should be reversed. Now, in all these cases, section, meaning thereby act, and rules are working contradictory. Section says output liability should be added, output liability should be enhanced, whereby rule says ITC should be reversed. See, like in general sense, not in pertaining to this particularly, but in general sense, whenever there is a contradiction, then always act prevails. But in this case, there is one more point. Now let's read further. An amount equal to ITC availed by the recipient shall be added to his output tax liability along with interest in such manner as may be prescribed. Now it is very clearly written that it should be done in such manner as may be prescribed. But what is prescribed? What is prescribed? See, prescribed part is that such ITC should be reversed, and it is not in consonance. It is not in in conformity with the law as well. Sir, is the sound not clear? Surajji, hello, hello. Am I audible, sir?
Yes, sir.
Okay. Fine. Fine. Okay, I received a message that the sound is empty. Okay.
Voice is not coming. Hello.
Voice is coming, sir? Hello? Suraj ji, is my voice clear? Shrey, sir. It is still low.
Yes, it is. Now it is too low. Ankit ji.
Now it is too low. Hello? Is it okay now, sir?
Ankit ji, please say something. Ankit ji.
Hello? Is it
No, no,
audible?
it is. No, 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 not audible, Ankit ji. Just a minute. I will call. I will confirm his Shay. Just a minute.
Is it okay, sir? Hello? Okay, okay, fine.
Yes, yes. Now it is okay, Ankit ji. Please continue.
Okay, okay, fine, fine. Thank you. So, see, I was referring like in case whenever there is difference between or whenever there is variation between act and rule, then always act will prevail, right? But in this case, the act clearly mentions in the last point in such manner as may be prescribed. But in rule 37, it is prescribed as the ITC to be reversed, and in such a case, such portion of the act against which rule or proper rule is yet not made, or rule is not made applicable, or rule is not in consonance to the act. In such a case, such part of portion of law cannot be made applicable. And you can clearly refer the case, the Supreme Court case of B.C. Srinivas Shetty. You know, we have discussed all these points. The famous case of B.C. Srinivas Shetty, CIT versus B.C. Srinivas Shetty, 1981 case law. If machinery provision is not there, then in no case such part of law can be made applicable. Due to this only, there was amendment in section 16 in this budget 2023. Let's read some important words, only the words which have been striked off. An amount equal to ITC available by the recipient shall be added to his output tax liability along with interest thereon. Now these words have been cancelled. Now what has been, the remaining part shall be paid by him along with interest payable under section 50. And now the second proviso of section 16 and rule 37 are aligned together, are now in consonance to be working with each other. And now there is no issue. Let's refer to another segment, important areas for case laws, important areas for show cause notices, important areas for appeals also. Section 16, subsection 4 notices. I'll just read out for your reference. Section 16, subsection 4. A taxable person shall not be entitled to take ITC in respect of any invoice or debit note for the supply of goods or services or both after the due date of furnishing of the return under section 39 for the month of September following the end of financial year to which such invoice or debit note pertains, or furnishing of the relevant annual return whichever is earlier. Now in this section already some words are striked off. Such amendment was brought through Finance Act 2020. The basic reading of this section 16 subsection 4 clearly says that the last date against which you can claim or you can avail the ITC for previous financial year is up to due date of return of September for the next financial year, right? Okay. So what is the respective due date? Now let us think that if we are referring to financial year 17-18, then the last date was 25th of October 2018, which was further extended to due date of return of March 2019 through second removal of difficulty order. Now, this I am referring only for financial year 17-18, right? For financial year 17-18, the due date was extended to due date of return of March 2019, sorry, right? And for financial year 18-19 and onwards, it was always 20th October of next year. So now let us discuss one by one each and every important point. Suppose if, listen very carefully, suppose if you are referring to a situation, whereby the goods and services have been received, but the invoice was not being received. Right, but the invoice was not being received. So whether you can avail ITC? No, sir, you cannot avail ITC. But let's discuss this then in respect of section 16 subsection 4. Now, what can we discuss here? Let us have a look. You can reply some important points like the time mentioned. The time mentioned starts from the date of invoice or debit note, but not the date of transaction. I repeat, section 16 subsection 4 says a taxable person shall not be entitled to take ITC in respect of any invoice or debit note. It does not say a taxable person shall not be entitled to take ITC in respect of inward supply. The words mentioned are ITC in respect of any invoice, but not ITC in respect of any inward supply. And this will create a difference whenever we are referring to notices for RCM. Likewise, what we discussed previously around 1 hour back. In case of RCM notices, you are going to create self-generated invoices. And since the invoice pertains to today's date, and hence the time limit also starts from today, and not from the time period for which the transaction falls. Right? Another point, ITC is your vested right. ITC is your right, and you can always avail the ITC regardless of the fact whether you file the return or not. But this is not going to stand in court of law. But at least for initial replies, you can definitely add this. Another important point for this section 16 subsection 4 is, you can always refer that you have paid the late fees also. And by virtue of payment of late fees, I repeat, by virtue of payment of late fees, you are going to have the benefit of all kinds of ITC also. But unfortunately, even this has been struck off by some high courts. Another point what you can refer is section 16 subsection 2 starts with non-obstante clause. It starts like notwithstanding anything contained in this section. I repeat, section 16 subsection 2 starts like notwithstanding anything contained in this section, and hence after complying with the conditions of section 16 subsection 2, the recipient might not be complying the conditions of section 16 subsection 4, but even this contention is not going to stand. Another point what you should write in your show cause notice replies is GSTR 3B was not a return. I repeat, GSTR 3B was not a return till 9th of October 2019. Particularly, we are receiving notices for financial year 17-18 and 18-19. And even orders might have also been issued for financial year 17-18 and 18-19 in some cases. In case any of us is going for appeal, then you should always refer to a point whereby GSTR 3B was not considered as a return till 8th of October 2019. And then and there, on 9th of October 2019, a notification was being issued bringing into GSTR 3B retrospectively. You can also mention one very important case law, Vatika Township Limited, whereby it was being mentioned that whenever there is a change of procedural nature, I repeat, whenever there is an amendment of procedural nature, such amendment must be brought in prospectively only and not retrospectively. So you can challenge this bringing of GSTR 3B retrospectively. Another important point which you should refer in your reply is, see, let's have a reading once again. A textile person shall not be entitled to take ITC in respect of any invoice or debit note. Now, whenever we are considering input tax credit, there are 5 terms. One is eligibility, one is entitlement, one is availment, one is utilization, and another is taking. Now, eligibility, you must be registered, you must be dealing in taxable supply of goods or services. Entitlement, you must comply with all the conditions referred in section 16 subsection 2 and read along with some other rules, rule 36.4, rule 86b, right? Availment of ITC. Now, as far as availment of ITC is considered, whenever you are considering availment of ITC, in all such cases, availment of ITC means ITC availed through GSTR 3B. Wherever you are referring GSTR 3B, anywhere in act, rule, notification, circulars, case laws, anywhere, wherever you are thinking of, or wherever you must have read about GSTR 3B for the purpose of ITC, you must have used the words availed, right? So, but here the word is taken. Another point is utilization. Utilization of input tax credit is utilizing the ITC for the purpose of offsetting output tax liability. The word mentioned in section 16, section 4 is take. Now, this word take is nowhere defined in GST law. Whenever there is such a kind of situation, in all these cases, you always go back to, yes, sir.
We have some questions from participants also. So
yes, sir. 2-3 minutes, sir. 2-3 minutes.
Okay.
Right. Whenever you are considering the words take, so this take word is to be construed in terms of previous law. Now, in such a case, whenever you go for excise laws, this take word would always mean taken in books of accounts. Now, in all these cases, whenever such ITC was booked in books of accounts, you can always take the benefit of this word take, right? With this, I give a rest to my voice, and I would like to take the question, sir.
So, Ankit,
Yes,
first
sir.
question is like, what is the next step if order is issued under DRC 7 without providing personal hearing?
So, in case personal hearing is not there, then you can always you are having 2 different alternatives. Either directly go to High Court, or you can go to directly appellate authority also. Better is to go or to move through appellate authority only, and you can give your submissions to appellate authority on the ground that reasonable opportunity of being heard was not being given. And in case reasonable opportunity of being heard was not given, basically principle of natural justice has been denied to you. And in all such cases, department is taking really positive view on this front. Yes.
Okay. So I think we got the answer. So second question is regarding how to handle so-called notice in GST regime.
So that was
That is
my
the
session all
question.
about.
I think you have already provided, right,
Yes,
this seminar, right? And third question is, like in most of the cases, show cause notice have been issued without considering natural justice. What we will do in such type of case?
Again, same point, sir. Again, same point. That in case SEC has not been given the principle of natural justice, likewise, 3 hearings have not been given, then you can either directly go to High Court, but in some cases, we are observing that High Courts are not favoring this point of view. They are always of the view that you are already having alternative course of action. So why you have directly come to High Court? So it is better to move the whole case through Commissioner appeals only.
Okay. So fourth question is for Ankit ji. Grant received from central government, whether it can be considered as service to government and taxable under GST or not.
Service to government.
Yes, grant is received. So he is saying that grant is received, and in response to that, whether it is called as service provided to government and taxable under GST is asking.
What kind of grant is received?
Hello, Ankit ji. Hello. There is some. Nisag, please. Madam, that actually voice is not coming. So Ankit ji, I think.
Hello, am I audible, sir?
Okay. Yes, come back. So, but I think.
Yes, sir. You're audible.
Yes, sir. Yes, sir.
Okay. Yes.
What kind of grant, sir? It depends upon.
Okay. So actually, grant in aid, actually he written only grant received from central government. What type of grant they have not mentioned. So can you malab, give some idea about it?
Okay. Sir, in case it is very clear that you are providing or you are offering some kind of goods or services, in case the transaction comes under the ambit of supply, then definitely yes, you must pay the GST on the same. Otherwise, only by the fact that you have received the grant, this cannot be the whole and sole ground that you have supplied goods or services, and there cannot be any GST liability, in my view, in general terms, sir. Although the question should be very specific, in particular.
Okay. So the fifth question is, uh, should grant received be considered as exempt supply while calculating reversal of common credit?
Again, I would refer the same answer only.
Yes.
Because in case the grant or grant received, do you really consider it as a supply from your side? I seriously doubt, sir. Although the question, again, I'm saying the same answer.
Yes.
The question needs to be very particular.
Yes. Okay. So, sixth question is whether the company's internal taxation manager can appear before the GST authority. Yes.
Yeah, definitely.
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 Yes. So he can, internal manager can attend the GST hearing, right? And appear before the authority, right?
Definitely, sir. Definitely.
Okay.
Client can itself pursue the matter.
Yes. Okay. So last question is, can we avail ITC on imported goods if goods are delivered free of cost and duty and clearing expense all borne by the supplier? I can't understand the question. If you can understand, Ankit ji,
Please repeat, please.
can we avail the ITC on imported goods if goods are delivered free of cost? Okay, if goods are delivered free of cost, then can we avail the ITC on imported goods and duty and clearing expenses all borne by the supplier?
But in that case, no amount has been paid from your side to the supplier, right? And you are making
Duty
the
and
payment,
clearing expenses will be borne by the supplier.
right? So in that case, you are not going to make any kind of payment to the supplier. So how can
Yes.
the condition of 180 days is getting fulfilled? Question is again not very clear, sir.
Okay. Your voice is not audible. You are not audible, Ankit ji. Hello.
Hello. Is it okay now?
Yes, yes, it is okay. Okay, okay.
Yeah. Okay. Okay.
So I think Ankit ji, you have
Yes, sir.
answered all the question. I think participants are satisfied with your answer, right?
Yes, sir. Yes, sir.
So all the questions are answered, right? And thank you very much, Ankit ji, for your wonderful session about GST show cause notice and reply. And I think participants will matlab, get the understanding now so that he can reply properly and drafting the show cause notice about section 73 and all 74 and all. So
Yes.
they are very well with your seminar and thank you, Ankit ji,
Thank you, sir.
for right. Thank you for seminar and thank you for the part. Thank you all the participants for attending and giving your time. Thank you, Angit ji. Thank you, Dhruvin ji, for delivering the nice session about audit uh, standard. Right. Thank you, Angit ji. Thank you, Dhruvin
Thank you,
ji.
sir. Thank you.
Thank you.
Thank you. Thank you.
Thank you. Bye bye. Thank you.
Thank you,
Have a
Dhruv
good
ji.
day. Okay.
Thank you, Suraj.
Thank you.
Thank you.
Thank you.
Nisag, you can stop this session.